Another day, another high. Markets end the week on a record high. Sensex shuts shop at 22,340 levels, up 126 points. Nifty ends just a tad below 6,700 levels. Rupee on a roll. Rupee strengthens to below 60 level at 59.88 rupees against the US dollar for the first time in 8 months. And IMF throws Ukraine a lifeline. The International Monetary Fund announces $14 to $18 billion rescue for Ukraine. Hello and welcome to Business Wrap. I am Sidhant. Sibal. It's a beautiful evening here in New Delhi, but all the news is coming from Bombay, from Dalal Street, where the markets have literally zoomed up. The markets ended the week and the day on a record high today. Key benchmark indices edged higher in choppy trade, with market sentiment boosted by data showing that the foreign institutional investors or FIIs resorted to heavy buying of Indian stocks on Thursday. The barometer index, the S&P BSE Sensex and the 50-unit CNX Nifty both hit a record high. Sensex gained 126 points to end at 22,340 levels, while the NSE Nifty ended 54 points up at 6,696 levels, just below that 6,700 level. The BSE mid-cap and the small-cap indices rose more than 1% each, with both these indices outperforming the Sensex. Gainers on the chart were Tata Power, Hindalco Industries, SBI, NTPC and Bharti Airtel, which were up by between 5 to 3%. Losers on the chart were Bajaj Auto, ONGC, HDFC Bank, ITC and HDFC, which were down by about 1%. The Sensex has gained 6% in a month, while the NSE Nifty has gained 7.3% in a month. The market bet indicating the overall health of the market was strong. So how did the markets trade throughout the week? Here's a special report.
It was a bull run throughout the week. The 30-share benchmark Sensex closed at 22,055, up by a whopping 300 points. Nifty also reflected the same mood and shut shop at 6,584, up by 89 points. Tuesday the rally continued, but the markets ended flat. The 30-share benchmark Sensex closed at 20,055, down by about 1%. Nifty reflected the same mood and ended at a record closing high of 6,590, up by 6 points. Wednesday the markets again touched intraday high but ended flat. The Sensex closed 40 points up at 22,095, while NSE Nifty closed at 6,601 levels, up by 12 points. The Nifty for the first time ended above the crucial 6,600 levels. Thursday the rise continued. Sensex gained 119 points to end at 22,214 levels, while NSE Nifty closed up 40 points at 6,642 levels. And as expected, the rise of markets continued on Friday as well. The equity markets hit a historic high for another day today, as the BSE Sensex advanced 150 points to start the day at 22,363 levels. So the question is, will the super bull rally continue? Keep watching this space. Business Bureau DD News.
From the Indian stocks to the global markets, the European stocks edged higher on Friday as investors awaited key data that may show the euro area economic confidence rose in March. Key benchmark indices in UK, France and Germany were up by between 0.51% to 0.85%. The French consumer spending in February rose only slightly, data showed on Friday. Consumer spending, the main driver of the French economy, rose 0.1% in February from January. Onto Asian markets, the Asian stocks edged higher on Friday as the recent weaker economic data from China has raised expectations that China will take steps to stimulate its sagging economy. Key benchmark indices in Hong Kong, Singapore, Japan, Indonesia and South Korea were up by between 0.15% to 1.06%. The Taiwan weighted index was off 0.06%. China Shanghai Composite Index shed 0.24%. On to American markets, which will open, but the future markets are open. Trading in the US index futures indicated that the Dow could advance 37 points at the opening bell on Friday. The US stocks market extended losses for the second day and finished lower on Thursday amidst concerns that improving economic indicators might force the Fed to start raising rates sooner than anticipated. US government data showed that the growth of the economy in the fourth quarter was bumped up 2.6%, mainly because of the higher healthcare spending. Here are the key drivers for the markets for the next week and also next month. The RBI's first bi-monthly monetary policy statement 2014-15 will come on Tuesday, that is the 1st of April 2014, and will dictate near-term trends on the bourses. Citing pressures, the Reserve Bank of India raised its key lending rates by 25 basis points after the third quarter review of the monetary policy for the financial year 2013-14 on 20th January 2014. Trend in investment by the foreign institutional investors, trend in global markets, trend in other global emerging markets, the movement of rupee against the dollar, and the crude oil price movement also hold the key. The next major trigger for the stock market is the outcome of the upcoming Lok Sabha elections. Lok Sabha elections will be held between 7th April 2014 to 12th May 2014 in 9 phases. Auto stocks will be in focus as companies from this sector will start reporting sales volume data for March 2014 starting Tuesday, that is 1st of April 2014. PSU OMCs will be in focus as state-run oil marketing companies will review the fuel prices on 1st April 2014 based on the average imported oil prices in the previous fortnight. Globally, the Federal Open Market Committee or FOMC next will undertake the monetary policy review at a two-day meeting on 29th and 30th April 2014. But the other big news of the day was the rupee continuing its rising streak. The rupee today strengthened to below 60 level at 59.90 for the first time since July 2013 against the US dollar in late afternoon trade on sustained foreign fund flows. Sustained selling of the American currency by the banks and exporters and the ongoing bull run on the domestic equity markets also buoyed the rupee sentiments. The Indian currency resumed higher at 60.18 per dollar against the last closing level of 60.31 at the interbank foreign exchange or the forex market and firmed up further to break the crucial 60 level to trade at 59.90 in late afternoon trade, a level last seen in July 2013. The currency has gained 2.9% against the US dollar this month.
The mint market is on a roll. The rupee touched the 60 mark against the dollar after a gap of 8 months. There are many reasons for this rupee rally. On fresh selling of the US currency by exporters and banks due to persistent foreign capital inflows, it firmed further to a high of 60 after 8 months. Further gains in the rupee could be capped given traders expect good dollar demand from importers to meet month-end commitments, while the RBI could continue to buy the US currency to build up its foreign exchange reserves. Since the beginning of this year, the rupee has gained 2.79%, while FII have bought 3.23 billion from local equity markets. Fundamentally, the sharp narrowing of the current account deficit has been the biggest driver for the rupee. India's CAD is likely to below 2% of GDP this fiscal, as compared to a record 4.8% of GDP last year. A sharp reduction in the import of gold coupled with rising exports have helped narrow deficit. A series of steps taken by RBI Governor Raghuram Rajan has helped the currency find its feet. The RBI has been suspected to have bought dollars aggressively over the last 2 trading sessions to shore up its foreign exchange reserve and prevent a massive appreciation in the local unit, which could be detrimental to export growth. Analysts say, though the near-term bias is for the rupee strength, investors must remain cautious. Foreign fund inflows into domestic shares, which hit record highs for a 4th consecutive session, have been a key factor helping the rupee. However, stable government will also strengthen the position of the currency market. Traders said gains in the domestic share market in other Asian currencies limited further losses in the local unit. Emerging currencies held near multi-week highs for the dollar, buoyed by Chinese stimulus hopes and stable US yields. Anchi Gulachi Gumbar, Business Desk, DD News.
So the markets on rise and rupee on a roll. We have a special discussion lined up, but after this small break.
क्या आप कुछ छुपा तो नहीं रहे? प्रॉपर्टी ट्रांजैक्शंस, कैश डिपॉजिट्स, बिग परचेजेस, परचेज ऑफ शेयर्स, बॉन्ड्स एंड डिबेंचर्स। कुछ छुपाइए नहीं, क्योंकि हम सब जानते हैं। आयकर विभाग के नोटिस का इंतजार मत कीजिए। यदि आपने अपने अग्रिम कर का भुगतान अभी तक नहीं किया है या अपनी आयकर विवरणी अभी तक दाखिल नहीं की है, तो 31 मार्च तक अवश्य कीजिए और देश की प्रगति में भागीदार बनिए।
2 एकम 2, 2 दूनी 8, 8 दूनी 24, 24 दूनी 7। अगर आप सोच रहे हैं कि मेरे पहाड़े गलत हैं, तो आप गलत सोच रहे हैं। ये महंगाई का वो पहाड़ा है जो इस देश की सरकार हमें पढ़ा रही है। महंगाई का पहाड़ खड़ा करने वालों जनता माफ नहीं करेगी।
चलो हालात बदले, देश की सरकार बदले, भाजपा को वोट दे। अब की बार मोदी सरकार।
क्या आप कुछ छुपा तो नहीं रहे? प्रॉपर्टी ट्रांजैक्शंस, कैश डिपॉजिट्स, बिग परचेजेस, परचेज ऑफ शेयर्स, बॉन्ड्स एंड डिबेंचर्स। कुछ छुपाइए नहीं, क्योंकि हम सब जानते हैं। आयकर विभाग के नोटिस का इंतजार मत कीजिए। यदि आपने अपने अग्रिम कर का भुगतान अभी तक नहीं किया है या अपनी आयकर विवरणी अभी तक दाखिल नहीं की है, तो 31 मार्च तक अवश्य कीजिए और देश की प्रगति में भागीदार बनिए।
Well, welcome back, and as we promised, we have a special discussion with stock analyst Jagannathan Thandulkar, and we will discuss all the market action. So my first direct question is, why the market is rising? What's the key reason? Throughout the week we saw the market, the bull run. So what's the reason?
We have to see it in the context that the Indian market has remained in a range for 6 years. Starting 2009, nothing has happened in the market. So now finally market is getting a confidence that probably there will be a larger single national party will be coming with a significant majority, which will give a legroom for it to take decisions. I think that is where the whole trick is. We have to see that remaining emerging markets, remaining European markets and US are not performing as well. I think they are all sideways, they are all subdued markets, whereas India is running away because of the pre-election hope rally. But if the market gets what it wants, that is in terms of the clarity of majority, then it's a different thing. But if there is that kind of clarity doesn't come, there is a chance that market will get corrected after the election results.
So, but talking about this pre-election rally, how long will this hope rally, as you termed it, will last for?
May 16th, I think the results. I think up till then, I think at least market should be on a good mood. I think having said that, I think best of the rally is behind us. I think 100-200 points can always move. That's a different thing. But best of the rally is behind us.
So rupee was the second big story of the day. The rupee strengthened to below 60 level. Where do you see the future of rupee, and what's the key reason? Is this the strengthening of rupee just a phenomenon given the fact the financial year is coming to an end?
That's one. Another thing is so much money is coming into India. FIS are putting in about that $3 billion till date. That is in Indian terms about 15,000 crores or so. When so much money comes, what happens is that they will sell the dollars by the rupees. Naturally, rupee gets stronger and stronger. I think if the same trend continues, one can expect rupee close to 58 levels.
You expect rupee to be around 68 level by
58.
58? time period, 2 weeks?
In the next 2 to 3 weeks. Yeah.
2 to 3
These days anything can happen in hourly basis because the speed with which the markets are moving, I think that will be coming. Only thing is the market momentum should not get disturbed in terms of the election anticipation. If there is any political development which can disturb the market anticipation.
Jagan, we have few emails. Our first email is from Rajesh. He says that he has 500 shares of Dena Bank and 100 shares of PNB at the level of 51 and 520 respectively. What should he do? And another question I would like to ask, given the fact that NP has been a key concern for the banks, it has been rising, we saw the SBI reporting its number. So where do you see the entire banking sector and specifically these two stocks?
When market is in such kind of mood, I think concerns market tends to just ignore. I think NPA is a valid concern, but in bull markets, market doesn't have time to think about problems. To that extent, and I am very happy with the investor at the pricing point at which he bought, brilliant levels. He is sitting on a very good profits. I think I am happy for him. But having said that, one should not be too greedy as well in the markets. I think I'll suggest him at least take 50% to book 50% of the profit. Remaining 50% he can book close towards that election results. I think at least 50% he can. It makes sense to book the profits.
Jagan, PSU stocks rallied today. What was the key reason for that?
Banks are on a roll. They are almost on a fire in the last 1 week or 2 weeks. I think entire market rally was single-handedly taken up by the banks. One is that all of them were beaten down very badly in the last 3-4 years. They were all undervalued. So to that extent, whatever money is coming from the foreign countries, that is foreign institutional investor money, they are all going into these beaten down stocks. But as again said that there is gravity works in markets. I think one should remember that at some stage or other, market will get cool off. Before that happens, investors who are in good profits at least make sense to take 50% from the table.
Jagan, continuing with that, banks are an important indicator of the economy. Where do you see the economy going, given the fact in the last 2 to 3 years we have seen negative news, but that news is now...
Most of the NPS that you referred came from infrastructure and power sector, because these two sectors have been rank underperformers in the last 4 or 5 years. Now, if the new government and better decision making, if there is uptick in the infrastructure and power segment, what it will do is that NPS will automatically get pulled off. And moreover, RBI, if it helps the market in terms of giving an indication about a possible rate cut. I am not expecting any rate cut in this meeting, but at least if they can give a possibility of rate cut maybe in the next 2 or 3 meetings, I think that will add up more juice to the...
So you don't expect any rate cut this time?
No, this time no rate cut.
And what is the key reason? Why do you think so?
Because one is US central bank, Federal Reserve is talking about rate hikes. It requires lots of guts for Indian central bank to go against the trend of Federal Reserve and to think about rate cuts. I think that will be too premature to think about rate cuts at this moment. I think one thing will be sure, it will be paused. I think rate hikes may not happen, but at the same time rate cuts also will not happen, meaning thereby for the current moment it will be a pause. Status quo, and then maybe eventually, depending on Federal Reserve statements, I think Raghuram Rajan will follow the suit.
You talk about infrastructure, important part of the economy. The next question is from the cement sector. Question from Priyanka. I want to buy Abuja Cements and ACC at current levels. Is it good time to enter the cement stocks?
One caution I would like to give is whoever wants to enter freshly now, I will suggest not to enter, because markets have run up so much. It doesn't make sense to enter at these levels. If you are already sitting with the stocks, as the previous caller like PNB and Dena Bank, he can enjoy the rally. That's a different discussion. But fresh buying, I'm not suggesting at these levels. That's a classic retail investor mistakes. Every time they do, they tend to enter the market close to the peaks, and then they repent that why they bought.
Not a good time to buy.
While both the stocks are good, again I'm cautioning that the stocks she mentioned are good, but the current levels are not good to enter. Let there be a dip, let there be a cool off, then probably she can use the dip to enter.
When can we expect a dip?
That again, elections and two major things that are around the corner. One is of course the April 1st RBI meeting, and then eventually election results. Till that time, I think if there is no dip, I'll sincerely suggest the people who will not enter the market not to enter at this moment. It will be a classic blunder.
Jagan, the rupee has been strengthening. It's below 60 as we have already told. The strengthening of rupee obviously impacts the IT companies. is it a good time to invest in the IT companies?
No, it's bad time because if you are invested in a IT companies, they exit, because what happens is IT companies export their services, meaning thereby they get their revenue in dollar terms. If their dollar is getting weaker and rupee is getting stronger, actually it's a negative for IT stocks, meaning thereby IT stocks will be under pressure. It makes sense if you are sitting on a profit on IT stocks, use exit, because IT stocks can go much lower.
Okay. Our next question is on Infosys itself. Indra Narayan says that I have 100 shares of Infosys at 2,800 rupees. Should I book profit or should I hold the shares?
I'll suggest to book the profit, because she is sitting on profit, because current level of 3,200, she has 100 shares, so still she is sitting on decent amount of profit. It makes sense to exit. Of course, she could have booked the profit 3,800. The stock has moved from 3,800 to 3,200, but I'll suggest that it's not an exciting time to be in the IT stocks. No way.
So it's not a good time.
It's not a good time. IT stocks in general good, but when the rupee is getting stronger, it's not a good time.
Moving from IT sector to the oil and gas sector, we have seen lots of news coming from the oil and gas sector, election commission, the Reliance whole saga happening. Where do you see the oil and gas sector?
Again, two segments. If it's a Reliance kind of thing, I think if you're a long-term investor, current level is excellent level. Eventually, the Reliance will be heading towards 1,200, 1,300 levels. But if you're an OMC player, that is BPCL, HPCL, that kind of oil play, I think all these stocks have given phenomenal rally, 50% or so in the last 2 months. It makes sense to book at least 70-80% of your profit, because these stocks are sitting on so much of under recoveries. There is a hope rally that is giving the momentum to these stocks, but you don't test your luck too hard after the last moment.
Well, I like your term hope rally. We have a question from Atul. I want to invest in the oil and gas sector. I am currently holding ONGC at the levels of 350. Should I switch over to Reliance Industries?
True, I think that makes sense, because again, good stock she entered at a bad level, because ONGC buying level is 280, not 350. I think she got the buying level wrong. I think it makes sense for her to book whatever losses she is sitting on in ONGC, and then switch on to Reliance Industries. At this junction, Reliance Industries appearing to be a lot better bet than ONGC.
I would like to get your crystal gazing on this question, that that OMC companies will be reviewing the fuel prices on 1st of April 2014. Now rupee situation you know already. Do you think that we can see a cut in the petrol prices?
If there is any, of course, election commission has to pass it, because any price cuts, I think, have to go through the election commission clarity. Considering election commission has put the already gas pricing as well as on bank licenses, they said it's not a good time to do. Even if OMCs want to do a price cut, I'm not sure election commission will let it happen. So as customers, I think we have to be a little more patient, because if election commission doesn't let it happen, so it doesn't matter whether decision is taken or not.
Okay, we have another question from Sarjan. In the last 2 months, VIP Industries has surged by almost 60%. Is this the right time to enter into VIP Industries?
That is exactly the point I was saying, that getting a good stock is a different matter, getting the good stock at good price is a different matter. If already stock rally at 60%, entering currently at this moment will be a classic blunder. If you are sitting on the stock, that means if you entered 2 months back, enjoy the rally, but don't make a fresh buying. It makes a blunder.
Jagan, tell me, when the new government will come after the elections, what will be your expectation from the government?
Infrastructure first thing, and then getting the deficits under control and strengthening the rupee. I think these three things are the things foreign investors will be closely watching. I think whichever, it's not the government, I think for me that's important this time, it's the majority, because if it's a 180 seat kind of majority or versus 230 kind of majority, it makes a huge difference. If 180 majority, I think it doesn't matter which party comes, because eventually you can't make decisions. If it's a 230 kind of party, it makes such a big difference, because your body language, your thought process, your vision, everything comes up. So to that extent, I think what markets are watching is not the party or the person. Okay, it's the majority numbers.
Talking about reforms, what kind of reforms would you like to expect from the new government?
I think oil marketing companies probably they'll go ahead with the complete petrol diesel deregulation, and in infrastructure probably they will give some tax incentives for the infrastructure companies, so that better roads, ports, airports in that level of the side will be opened up, and then clearing some FDI proposals so that foreign money will be coming. It's all about decision making. I think speed of decision making. It's all about that. I think it's not the question of which policy is good. Many of the times, even a bad policy with quick decisions will be appreciated, because at least clarity comes. Till otherwise, as business community, it will be too long. It doesn't make sense to waiting too long.
Jagan, I have another question from Vitral. It's from the auto sector. Where is more growth visible to you in Maruti Suzuki or Hero MotoCorp? One is a two-wheeler, one is a four-wheeler company.
Both are different ball game. If you are, it seems the caller is obviously betting on automobile sector. If somebody is keen, probably Mahindra and Mahindra is appearing to be a much credible bet at this juncture than two. If having said that, Maruti has run up a lot. I'll suggest to book at least 50% profits if the caller is already having the position. I'll suggest if all this segment Mahindra and Mahindra is appearing to be better bet.
Where do you see the Maruti stock itself, given the fact it has now risen and almost many believe it's a gut feeling that it has reached its peak now?
That's true. I think 2000 is virtually appearing to be a sort of a resistance zone for Maruti. If you're sitting on Maruti, book profits.
Jagan, now talking about the international affairs, we have seen what's happening in Ukraine, the whole crisis happening there. How do you think it's going to impact here in India, and how much will be the impact?
Frankly, at this current juncture in Indian markets are not caring for RBI, Fed, Ukraine, Syria. No, market is just not in a mood to listen anything. It's just all about elections and hope rally. I think it's all about that. I think international factors, I think it has been a long time Indian market has completely forgotten.
Okay, so thanks so much, Jagan, speaking to us and giving all those tidbits and important crystal gazing of the markets. So hopefully we will see the hope rally continuing till the election is over, and we can expect more of hope rally given the fact that more reforms can be in offing. Now let's go on to the other big story of the day. Ukraine won a $27 billion international financial lifeline on Thursday, rushed through in the wake of Russia's annexation of Crimea. The International Monetary Fund announced agreement on a $14 to $18 billion standby credit for Kiev in return for tough economic reforms that will unlock further aid from the European Union, United States and other lenders over 2 years. The IMF deal, to be approved by the Global Agencies Board next month, was a political boost for pro-Western governments that replaced ousted Russian-backed President Viktor Yanukovych last month, prompting Moscow to seize the Black Sea Peninsula.
$27 billion over the next 2 years.
That is the lifeline Ukraine's been waiting for. The International Monetary Fund rushing through a bailout agreement for an economy that's on the brink.
This money is of high importance. We need it like air.
This money is very important for Ukraine because there's an economic crisis in the country. It means a lot for Ukraine.
Ukraine will first get between $14 and $18 billion in a standby credit, but the rest of the $27 billion will not come until after a series of reforms, including deregulating the economy and cutting energy subsidies. The bigger price could in fact be paid by Russia as the fallout from Crimea continues to take its toll. Moscow now forecasts capital flight could hit $100 billion this year, with growth slowing to just 0.6%, a quarter of its January prediction. The bailout still needs approval from the International Monetary Fund Board, a relative formality expected next month. Business Desk, DD News.
Well, that's all in this edition of Business Wrap. Thanks for watching. Have a nice weekend. Bye-bye.